What's up, guys? This is Carter Thomas with Coin Mastery TV Friday edition. Make sure you go and join the newsletter, coinmastery.com/invest. Put your first name and email address in there. Get on the newsletter list, get all the free info. Start dominating this crypto world. Look at these just crazy candles that we are looking at. Today, we're going to talk about Bitcoin, the $6,000 level, a little bit of resistance on that. Talk about a little bit about where that money is coming from. Talk about altcoins. Talk about hedging your bets as an investment strategy, kind of top level introduction of that. We're talking about a funny article about Goldman Sachs. And then we're going to talk about some macro forces that may or may not bring in an enormous amount of new interest and or money into crypto. Let's kick this off. So I'm looking at Coinbase right now. I'm on the 1 hour candles, and you can see that there was a massive spike a couple hours ago here that drove it right up into the 59s with this candle. And on Coinbase, at least, there's a massive sell wall that's holding this right below 6,000. On other exchanges, I think on Bitfinex, it broke through 6,000 briefly, came back down, and that's just based on the arbitrage across different exchange levels. But 6,000 is obviously a huge point of psychological resistance more than anything, which is kind of a funny thing to think about in general, is that just because it's a round number, it holds some different power in terms of market behavior and timing. So it's always fascinated me that that's how that's worked. But when you look at that as a psychological level, historically, when you break psychological limits, and it's coming off of a bit of a dip, one could say, you see a massive bull run through that. Meaning, if this clears that sell wall, at least on GDAX, which is Coinbase's exchange, historically speaking, it's gonna crush pretty hard straight up. And as the story and the narrative of this fork gets closer, the chances, in my opinion, of that happening go up and up. So that's what I'm looking for. At this point, right? It's October 20th. The Bitcoin gold fork, it's still kind of gray area in terms of when the fork actually goes out. Has it already happened? When does it get distributed? The 25th seems to be the date, but it's hard to know exactly right now because you just get so many varying points of view and pieces of information. But the bottom line is that the end of October and early November is a very, very uncertain and potentially profitable time to own Bitcoin. Now I say potentially because nobody knows for sure what's going to happen with those forks and what's going to happen with the price. But that in mind, with a psychological barrier of 6,000, if that comes down and people want Bitcoin for the 2x and for the gold fork free coins, as a perfect storm for this thing to just keep screaming up. I think what's also really interesting is that when we think about what markets do, and we've talked about this many times, the fundamental purpose of the market is to move money between people. And what happens often is that it moves money from people that don't have experience to people that do have experience, or from people that don't have a lot of money to people that have a lot of money. Markets tend to funnel money up to the professionals for most parts. And what's funny is that 3 months ago, if this had happened, a majority of people in the Coin Mastery community, and I would say in the crypto community in general, would have been pretty stoked because most people would have mostly owned Bitcoin and maybe some Ethereum, or Bitcoin, Ethereum, probably Litecoin, right? The Coinbase 3. Now, after having gone through a cycle of Bitcoin and getting a little bit antsy, or getting, looking at Bitcoin's returns and not thinking that a $6,000 coin could ever compete with and altcoins returns, a lot of money has moved from Bitcoins over into altcoins. And it's happened in various stages and through various means. And so now as Bitcoin prices go up, you see a much bigger sense of like there's less euphoria from the indie community, indie investor, whatever you want to call it, right? The average person community, as there was 3 or 4 months ago. People used to love Bitcoin prices going up, and now everyone's like, oh God, this just means altcoins are going to go even lower. And isn't it funny that's, I mean, I own plenty of altcoins. I mean, it sucks. I'm not trying to say like this isn't a good thing, but it's crazy how markets always tend to push the buttons in the ways that seemingly look obvious in hindsight, but we always think that we're smarter than the markets. And the markets are always just, they have this amazing force of moving money into the hands of the people that have the power and the money. So Bitcoin continues. I think it's going to continue to keep going up, but it seems like every time I say an opinion, people think that that's what I'm picking. So, that's just what history has told me. But yeah, I'm mostly just sitting back and watching this thing happen. Going to have a great weekend and go from there. All right. One thing to keep in mind and to notice when you look at price increases, and we talked about margin trading earlier this week and how that money could be coming in from different places. But another place to go, if you don't do this already, go to coinmarketcap.com and you can go to this trade volume, go down to 24-hour trade volume rankings by currency. And that's going to open up all the Bitcoin markets. This will show you where a lot of this volume is happening. So obviously Bitfinex, which is the big margin lending provider, they're doing 14.7% of the volume. And then you can the numbers go down from here. But sometimes you're going to see a huge Japanese yen volume driving the spike. Sometimes you're going to see South Korean kroner, right? No, Korean won. That's right. And you're going to see different coins, different currencies pushing the price in different ways. And this is constantly changing. And like we saw with the China thing, and this will continue to change. But often this can give you an insight into where to look for this news. It also gives you an insight of what exchanges to be looking for, the big sell walls, the big price action, stuff like that. You can also look on the exchanges to see if there's any sort of unique situations on whatever it may be. CryptoWatch or Crypto.watch, or however you spell it, can help you give a visual of this. But I always like to look at what countries are driving a lot of this. Where is this money coming from? What exchanges are driving it? What kind of people use these exchanges? You always learn something new when you look on there. I mean, look at this. Zencash on Bittrex was number 8 Bitcoin market today, 24 hours. That's insane. Like Bitcoin Cash was number 7. The rest of them are all fiat. So, I mean, that's something to learn from that. Cool. Let's flip over to Bittrex. So many of you may have seen, maybe not, Zencash. It turns out that rumor that we've talked about yesterday was in fact true. I don't know why this microphone keeps moving around. Let's see if I can get it here. And so yesterday we were talking about it right down here, give or take. And then that report from that Palm Beach newsletter came out, skyrocketed, and now it's coming back out. And I think what's interesting about this is that on traditional pump news, you see a huge pump and then you see a sell-off, and then you see it come back way down, often back to normal levels. But with this, it's going up and it's obviously coming back a bit. But the psychology is different because this news came from a source that in the past called AntShares at 80 cents. It called OMG. It called gas, all of which and Monero, right? Like way back in 2016. I mean, it's called a lot of coins that have crushed it. And so the difference with this, which I think is really fascinating from a game theory standpoint, is that when people are thinking about whether or not they should buy or sell this, they're actually like, well, but this actually may be a very, very cheap price. If this is supposed to go to 500, like the guy says in the newsletter, just like AntShares did, why would I sell it? But the idea of it being a pump and dump still holds true. So what do you do? Right? How do you know what to do in that situation? And the answer is you don't. Like that's what individuals need to decide. And that comes down to whether it be technical analysis, whether it be fundamental analysis, getting good information. But I think that's why this is so interesting. I bought like $200 worth of it right around 170 the night before. I still hold it. I mean, it's like $200. It's not really a thing, but this has been a very, very interesting psychological, just to see how the market reacts. Because if once you find out that the news is whatever, you often see the huge deflation. And this time you didn't. In fact, you see a lot of people maybe thinking that they're going to gear up again and do it again, which is, it's how these markets work. QDM is also another one, right? On the flip side, where there was a big spike because I believe it got listed over in Korea, and then it had a dip, a very severe dip down to the bottom. So this is kind of the other side of the picture where it goes up based on flash news or whatever. Often that can be a catalyst for a big sell-off, which may also trigger stop loss orders and accelerate the downward volume of it all. But I mean, it's the unfortunate or fortunate situation of Bittrex and the altcoin markets on days like this is that Bitcoin just drives everything, and there's nothing really to. I mean, you can guess, you can take a shot at trying to hit one of these things, but until we know what the top is on Bitcoin, it's very hard to know what the bottom is on altcoins, and that's why it's just kind of a sit and wait game, and more importantly, sit and don't sell your stuff. I mean, because every day it goes down, you create more and more reasons to sell it, right? And that's the whole game, is that, it's that's what markets do. They just push you and push you and push you until it gets to the point where you don't know what to do. And the best thing you can do is just take your wallets and lock them up and go do something else. It's really the only way to survive days like today, or weeks like this week, or maybe even next week if it goes up to 7,000. Not saying it will, but if it did, it'd be crazy. Quick, something that I thought it'd be interesting, and I want to be clear here. I don't do this, nor do I endorse this in this particular manner, but there's not many options in crypto to hedge your bets. And I think a lot of people don't know much about hedging and how hedge funds work, and also just how things like options and derivatives and whatever, futures exchanges works. But let me paint you a picture. Let's say we know very loosely that Bitcoin, when it goes up, it tends to suck money out of altcoins, and also the exchange rates on altcoins go down. US dollars on altcoins don't necessarily go down because they're all paired to Bitcoin, but there's some semblance of an inverse correlation going on as Bitcoin rises and as altcoins decline. And whenever that happens, you typically want to make sure that you have a hedge in the opposite direction, meaning if you are buying an altcoin, you're trading Bitcoin for that altcoin. Like, you're kind of going short on Bitcoin for the altcoin. And so a hedge would be, how can I take something that has a little bit of money, but can give me a big return if Bitcoin actually does end up going up a lot? So in the traditional markets, capital markets, stock markets, bonds, anything, you can buy an option where, let's say you short Apple stock, you can buy an option on Apple prices going up for 1/10 of the price. But if it does go up and hit that price, you actually break even on the trade because the way options are, it's riskier, but it costs a lot less. So you're mitigating your risk one way or another. And if you don't know much about this stuff, I would encourage you to go Google it. I'll put in some links here to help with this. Now in crypto, you don't have hedgeable assets. You don't have these security options to be able to do those hedges, which is a big reason why institutional money has not come in yet. What we do have is leveraged accounts. Again, I do not do this. I'm not endorsing it, but I do think it's helpful to start thinking this way, because this is what pro traders do outside of crypto, right? When you have more options, yeah. Will I buy some options if I go long on something? Will I buy a short option on it? Yeah, I mean, sometimes I will if there's enough money, because that's a good hedge to do. But you got to start thinking about this, because this is what's, as these potential ways to trade come into the fray, it will help you a lot. So what you do is that, let's say you have like $10,000 and you put $5,000 into altcoins and you have $5,000 in cash or whatever it may be. Or maybe probably more disproportionate, maybe like $8,000 in altcoins and $2,000 in cash. But if Bitcoin goes up, you don't want to be screwed both ways. Like, one, you lose out on Bitcoin, and two, you lose on your altcoin. And so what you would do is buy $8,000 worth of the altcoin, and with that extra $2,000, you could go to a futures market with leverage trading and do something like take $1,000 of that and do like a 5 or 10x margin on the upside. Do you see what I'm saying? So if you take the 8,000 in altcoins and then you have that 1,000, and if Bitcoin goes up a little bit, you're going to get 10x the leverage on that upside. Now you also get 10x the down. So you don't want to do this on any regular time. Like, you gotta know what you're doing with this. It's not a very good system like options are, but it protects you in a way where if the altcoins do go down, the leverage theoretically goes up. Off of $1,000, you're getting all the upside that you lost on the altcoins, and you're not actually losing any money. Like, that's what hedging does. And it doesn't necessarily break even. It just protects you from losing money. And that is really the name of the game. Now, leverage trading, I'm going to say this multiple times. It is not a very good idea. It's not safe. Go try it if you want. I'm not going to put any affiliate links or anything. You could try it if you want to, but I wouldn't recommend it. But it's important to start thinking that way. A more safe version that you can do, and I'm not saying this in like, hey, be safe with your money, guys. You know, we got to live to be 100 here, retire. I'm not saying safe that way. I'm saying safe like you can get totally liquidated if you do not know what you're doing here. Like, game over, bank account gone type thing. So the other way to do this is when you start buying altcoins, or even when you're buying Bitcoin for that matter, think about it as somewhat of an inverse relationship to Bitcoin. And for every $100 in altcoins you're buying, maybe you also buy $100 worth of Bitcoin. Or maybe for every $100 worth of altcoins you buy, you keep $100 in cash in your bank or something, or whatever it may be. But for every decision you make, for every trade you make, you should be thinking about, what is the hedge that I'm doing here? And so in my case, one thing I don't talk about that often, which it was very obvious that I needed to talk about this the other day, is that if I make a trade, let's say on, I don't know, OK Cash or whatever, I don't own any OK Cash or Monero, right? I own plenty of Monero. If I buy some Monero, just as much as I'm buying Monero, I am also adding to the dollar cost averaging on Bitcoin. And I'm also making sure that I have a certain number of cash. That is another hedge against Monero. So that when Monero does its thing, Bitcoin will have relatively inverse correlation, and then cash will also have a way to mitigate the overall risk as opposed to going 100% into one thing. So it's a little bit different than diversification because you're actually mitigating risk on one leading part of your portfolio. And I think that that's something that gets lost because everybody talks about like, oh, I'm going to do this trade. I'm going to do this trade. Here we go. When the big picture might not be there. Remember, 70% of my funds are in long-term holds. It's just dollar cost averages. It just goes long all day. That is a hedge against myself and against altcoins in the trading world. And then I also have just regular cash. And then I also have investments on the, regular market investments and both conservative and aggressive. There's a lot of different stuff that all hedges itself. And so, but the trade stuff is that's what people want to hear about without thinking about how do you hedge against this action. So if this is a new concept, I would encourage you to go learn more about this. I'll post this link and give you an overview of this. There'll be more instruments to do this with in crypto over the coming months and years that hopefully will be available to regular investors, not just institutional or accredited investors. But in volatile markets, hedging yourself is super important. And again, leverage trading, probably not the best way to do it, but it illustrates the idea better than most other things. For most of you, for every altcoin trade you do, you should probably be buying a little bit of Bitcoin. You should also be keeping a little bit of cash on the side. There should be a 3-way split of every dollar that you invest one way or another to hedge the downside, to hedge the upside. This is really, really important. Okay. Interesting, fun little article from Zero Hedge Day, speaking of hedging, where this I thought was a great chart where it looks like as of, let's see what the actual, if I refresh this, looks like our new market cap on Bitcoin, 99 billion, just exceeded the market cap as of this morning of Goldman Sachs, which I believe was 94, 95 billion when I checked earlier this morning, even after a nice 4% run, which we'll talk about in a second, which means that Bitcoin is bigger than Goldman Sachs. That's insane, right? And I mean, you can dissect that valuation however you want, but the fact of the matter is market cap is a market cap. And, that's where we're at. I mean, who would have ever thought that we would have gotten to this point? That's just insane. There's some information about Zimbabwe and how there's been a crisis. The same thing's happening in Venezuela, or similar things are happening in Venezuela, where the government's currencies are just losing all value. So they're moving to these decentralized forms of currency that are inflation proof, so to speak. And that's causing a bit of this drive up is these third party markets. But that's hard to make that case when when that activity is so much smaller. But interesting theory, that's for sure. One thing I could recommend, do not read the comments on Zero Hedge. It's like the most depressing thing you'll ever read in your life. Finally, the tax bill that President Trump has put forth to Congress made it through the Senate. First, let me be clear here. When it comes to politics, please do not post anything political on my Twitter or on my YouTube. I have no interest in talking about politics. I don't care what anyone, just don't do it. We're here to make money, period. That's all that matters. So this got through the Senate. Now it needs to go through the House. The Senate is usually historically a little bit more of a big deal, but it's showing that it's getting some momentum. And then if this passes through the House, there's going to be a very very, very good environment for a bull run, at least in the short term. And the biggest reason why is not because of the tax reform necessarily, like corporate tax rates changing, that will make a bit of a difference. The big deal is the one-time repatriation from foreign funds, meaning there'll be a one-time tax holiday for companies that store money overseas to bring it back to the U.S. at a massively subsidized tax rate, so that there'll be more money in the U.S. that doesn't need to live in other countries. This is a very big deal as it relates to crypto, because a lot of the countries that money is stored in do not have these exchanges. Meaning, if number 2 was Ireland or the Cayman Islanders, if it was any of these tax havens for a lot of these corporate companies, they could theoretically, and this is a gray area, be buying crypto on those exchanges using those tax rates. But Japan, South Korea are not tax havens for a majority of companies, for any companies really, as far as I know. But if a lot of that money, it's a huge amount of money, if that money comes back in, whether it be for companies, whether it be for funds, whether it be for just that amount of money comes back into the United States, there's going to be a lot more money for investment. And that money will eventually trickle down into, not a reference to trickle down economics, it's just a figure of speech. It'll trickle down into the investment world, whether it be through private equity, through hedge funds, anything. And it will free up cash that can make its way into crypto on the US exchanges. There are a lot of these sort of macro things all tie together in terms of how are we going to get more money into Bitcoin, into crypto. If more money comes back into the United States, it goes back into companies who can not necessarily even spend it, but more people will invest in it. We see bigger returns coming off of that. More people invest in the funds. The funds themselves now have more cash that they can go invest theoretically in crypto. So this, politically, whether you like it or not, will probably have a very good effect on both the economy and on crypto. It's not going to happen immediately, and who even knows if this is going to pass. But that's very, very interesting. Making fiat currency more liquid, having more velocity to that money, meaning it exchanges hands more often, loosely speaking, is a good thing for these kind of situations, for investing in new asset classes. So it's always an adventure in crypto. It's always great. Keeping an eye on this. We're going to see what happens over the weekend. Obviously, we'll be checking this podcast from Vinny coming out next 2 days, hopefully. It won't replace these videos or these podcasts, but I think it will just be supplemental, which I'm excited to share with you guys. Definitely go check out, start learning about this stuff, about hedging your investments, about hedging your bets. I think that as we start to, as things start to pick up one way or another, it's going to be really important that anybody who wants to do this more than just dollar cost average and check it 10 minutes a day, it's going to be an important strategy for you. And with that, I'm going to wrap this up. I hope you guys have a great weekend, and I will see you on Monday. Peace out.